Welcome back, everybody, to Macro Mondays, the #1 show in cryptocurrency. I might have to call it that, guys. I'm joined by Dominic Ryder, the CEO of VEMP. Dom, how was your weekend, my friend?
It was good, except I just noticed that I'm putting this jumper on. My head is like Velcro, and you can see that it just literally like picks it up like everything. And trying to get it off here, but it's like everything's back to front when you're using a camera, isn't it? Like you don't know which way is what.
It's
very good.
weird.
I've been in Dubai all of last week, so tell you what, every time I go away, like I get ill. I'm feeling fine, but my colleague's got COVID, which means inevitably I'm going to get it at some point. But yeah, all good, which is more than I can say for the market. I mean, some would argue differently, but yeah, I mean, the market can stay rational longer than most can stay solvent.
This is true. This is a true statement. Although many people in here would say that the market's looking quite good today, Dom, at a 1.17 trillion market cap. We're going to talk about all of this and more. Welcome, everybody, to the stream. Silver Fox, Liquidity, Dondo, CryptoPie, Sonia, Chaba's here, Bebs, Wanderer. The whole squad is here today. And, guys, we are going to be doing a $200 ETH giveaway throughout. So we're going to be having that to reward our amazing people that tune in today. First off, are you still in Dubai, or you just got back from Dubai?
I am back, thankfully, able to access my screens again and yeah, take a look and see what's what. It was a nightmare being away from the charts, even though I was still on it on my phone. I always get nervous that something's going to happen and I'm not going to be able to access it quick enough to cover myself and make sure that I'm hedged. But yeah, I'm back now, and yeah, absorbing everything that's going on. And there is a hell of a lot going on.
And we're talking about all that. How tough is it to be, a 24/7 day trader? Do you ever feel like you need a break and to get away?
I mean, yes, but at the same time, like current market conditions and what we're undergoing right now is one of those times where you just know that you have to give it your everything. Similar thing happened when I was trading my first, for those who don't know my history, before crypto, I started out as a derivatives trader. And then after that, I was in wealth management, then VC, then I joined crypto. But when I was trading derivatives as my full-time job for the company, it was around the same time that we had the Brexit vote. And so it's like that time, you just know that like you're going to have to be awake 24/7, like waking up at like 3 a.m. to see which way the vote's going, to go into the office at like 3 a.m. just to trade positions, call your clients and say, I'm going to call you like potentially at like 4 a.m. Is that okay? And if not, like, what positions can I put on, etc. So you just know that sometimes the market is going to be like this, but it's not all the time. Like it has been dead for a while, but right now, this time period will go down in the history books.
As what? Good or bad?
Terrible.
Dom, I got to stop you there because most people, and real quick, I got to give a shout out to my brother in arms, Vern. How we doing, Vern, friends? Good to see you on here. Dom, I got to talk about this because most people are on here right now in the chat too, guys. I would imagine most of the people in the chat are feeling pretty bullish. I mean, we were at a $900 billion market cap probably a week ago, a little under a week ago. Today here, we're sitting at a $1.17 trillion market cap. Bitcoin, 27,688, ETH at 1,700, BNB up to 337, XRP 38 cents, Cardano 33 cents, Solana almost back up to 24 cents. Dom, and you're saying that this is going to go down as one of the this is going to be a pivotal moment in a bad way. Dom, what's going on? Talk to me.
Yeah, I mean, my view, and I always talk about and apply like this markets and stock market to crypto, because in my view, some people are arguing now that this is like the separation. In my view, that's not true, because it's not that the crypto market follows the stock market specifically. The crypto market follows the NASDAQ. And I tweeted it earlier today. If you look at the NASDAQ's performance throughout the banking crisis, it's up over 6% when the whole rest of the market is down like 4%. So it's like 10% outperformance, which in stock market terms is huge.
Yeah.
And what you've seen happen today is that the NASDAQ is actually, if I'm looking right now, I can see the small cap index is up 0.5%. The Dow Jones, which is the Dow Jones Industrials, is up 0.7%. S&P 500, which incorporates everything, is up 0.25%, and NASDAQ is down 0.5%. And Bitcoin's strongest correlation is to the NASDAQ. And the NASDAQ has been ripping higher due to the fact that everyone trades with bots nowadays. And the bots are still set to buy tech when rates fall. Funnily enough, actually, the one before I got distracted, I was preparing a few charts ahead of this. And one of them was the move in Treasury Yields. Let me share a window. Here we are.
Go ahead, share that. How wild that trending is. Shibone Inu. It's like the meme coins are so wild, huh? Just Shibone Inu is trending here today. So what is this chart that we're looking at right now?
So this is the move in Treasury Yields, in the 2-year Treasury yield. And so I've said a lot, whenever you have these crazy moves in the market, there is always somebody on the other side of the trade. And in fact, there's actually a really famous hedge fund. I say this and I've forgotten the name of it. But the manager's been like a brilliant performer for years and years. And he's had to close his fund now because he was on the wrong side of this trade and he got screwed, lost all of his profits. Everything blew up, hedge fund gone overnight. And that's the sort of thing that you get in the current market conditions. Because you can see this 5-day move in treasuries because treasury yields track the interest rate of the USA. And so because everybody suddenly thinks, oh, the Fed's going to pivot, yields crater because they are an anticipation of the Fed's next move. So 2-year yields are the interest rate indicator of where people think that yields will be in 2 years' time. So they've absolutely cratered the yields because everyone's been buying bonds. And when people buy bonds, the yield goes down. And it's the biggest move since Black Monday in 1980s. Bigger than COVID, bigger than Great Financial Crisis, bigger than 9/11. And obviously, we're in an inflationary environment. So typically, people would have been short bonds, aka betting on the yield to go higher with interest rates going higher. Because only last week we were talking about 50 basis points hike. And now, actually not last week, week before last, we were talking about 50 basis points hike. Now we're talking about cuts. So since people thought the yields were going higher, they were short bonds. And then bonds have basically rallied by the biggest since the 80s. And the amount of like hedge funds and banks that would have been short just basically got liquidated. And so these massive hedge funds are having to close down shop because they've been screwed so hard. And this is where you have like massive outliers. And I think I can try and get up the Twitter again, because one of the key indicators of like, it's been such a good indicator for so long is the move index, which is bond volatility. So let me see if I can just share a window here.
Yeah, go ahead and pull that up. And guys, if you have not yet, make sure to hit that like button. 70 plus people in here, 22 likes. Let's get up to 35 likes, guys. If you haven't yet, that is a requirement to win the giveaway. Make sure to hit that thumbs up. Let's pull up your screen here. Dom, first off, we need dark mode on this Twitter, but that's another conversation.
I'm not logged in yet. So this is what I tweeted on 13th of March, right? And you can see that the so this was 13th of March. Bond volatility started rising again in early Feb and has since not stopped. The VIX, on the other hand, started discounting happy times again in mid-Feb. That all changed abruptly last week. So essentially, you can see here that the MOVE index, which measures bond volatility, knew that the market was going to have volatility before the VIX. The VIX is the equity volatility index. The move is the bond volatility index. And bond traders are smarter than equity traders because everybody understands stocks, but nobody understands bonds.
True.
And so traders are always called the smartest traders in the room because bonds always know where the market's going before equities do. So you can see that the move index front runs the VIX, which is equity volatility, and it also front runs the S&P. So this was 3 weeks ago, right? And you can see that this is the move inverse. So basically, because a measure of volatility goes up when the market is volatile, if you invert it, it will go down when the market's volatile. So that this way it tracks the S&P, and you can see that they were on track here, right? So this is 3 weeks ago, and then this is the overlay now. So you can see that the accurate measure, which so far has been very good at predicting and front running the S&P 500 and the VIX, this is where the move index is, right? That's the move.
Yeah.
So you can see the volatility levels. This is now higher than COVID and 2008. And you can see this is the VIX, the equity volatility index, right? So here's the move now, and here's the VIX now. And if you go back and look at where it was before, that was it before, and you can see the move is now literally gone vertical. And this is where people think this time is different. You know, here's COVID, right? So the move index, this thing is, it's even higher now. This is 173. This is 3 weeks ago. Now it's up towards 200. So it beat COVID's volatility levels 3 weeks ago, and now it's beaten 2008's levels. And people still, for some reason, think that this crisis is over and think that like Bitcoin is going to go to all-time high again. Like, it's done very, very well.
Yes.
But that is because everybody's algorithms are still set to buying tech when rates drop, because low interest rate environments are good for technology, which is why you had, like, you know, the NASDAQ do so well all of 2021, is because when these tech companies can borrow money at 0% interest rates, inevitably, like, they can grow massively because they constantly invest that. But now money costs something again. And so the bots are bidding up tech because it's low rates, but they're discounting the fact that the reason why rates are dropping is because we're about to get screwed. Because you can't teach a robot to have emotional context. You can only pre-program what you want it to do in certain conditions. And historically, low rates equal good for tech. So bots buy tech when rates drop, because you can program a bot to do that, but you can't program it to know why rates are dropping. That's the key difference.
So do you really think this is all just a game of robots trading? That's what this is? That's what crypto and stocks are, just a game of robots trading and not having the emotional intelligence, just like programming their trades. And that's all it is?
Pretty much. I think it's official in the stock market that I think 99% of trades now in the stock market are bots.
That's crazy. That's actually wild.
Well, this is why you have such volatility panics, and why for ages the VIX, the volatility index, has been suppressed, is because the VIX, which historically always rallies when equities go down, but it hasn't been working all of last year. And that's because it measures 30-day forward volatility. And now 40% of the options market, 40 to 60% of the options market is one-day expiration options. So people speculating on one-day moves. The VIX doesn't even take that into account. So even though the VIX has been dropping, that's only because it doesn't take into account that nobody is using 30-day VIX anymore. But all of that leverage blows stuff up. Like, it exacerbates every move, which is why you have, like, UBS was down 16% this morning. It went back into, like, the green again. But if I look it up now, I bet it's, like, swung back into the red. No, not quite, but it's it swung back up to +5, and now it's down 4.5 to only up like 1.3. Like these sort of swings in banking stocks, like they're trading like meme coins. Honestly, it's insane. Like the market and how a lot of people are going to be absolutely screwed by this, because a lot of people have got it into their heads that the market functions in a certain way.
Yeah.
And they're wrong. Historically, the market has basically been tricked into the past decade and thinking that's normal, because it's not a normal market. The past decade has been the outlier, and you can see if I can get a different chart up, which is the Bloomberg Commodity Index.
Yeah, while you pull that up, guys, just a reminder, in a couple minutes, we're going to be doing a 200 ETH giveaway, giving away $200 in ETH. This is pinned to my profile, so I want to make sure everybody gets a chance. All you have to do is retweet the tweet. There's already 165 retweets. Follow Dominic, myself, and VEMP Studios. And like I said, this is pinned to the top of my Twitter profile. Go ahead and retweet that. We'll be doing this in about 20 minutes. Dom, are you ready for me to pull up your chart?
Yeah, I'm just trying to find the most up-to-date one.
That's not it right there. And thank you so much, Striker. Striker said, we are going to the moon and beyond. I like to think so. Dominic is in disagreement here, but we will see that. Yeah, go ahead and pull this up and we'll get this, guys. And make sure to smash that like button, guys. 52 likes, 72 people in here. Once again, that is a requirement to win this giveaway. And how many giveaways should we do, chat? It's up to you guys. Should we do one $200 ones, or should we do two $100 ETH each? Let me know what you guys think. And make sure to hit that like button, guys. A good stream. And shout out to the Toshi community. Toshi community is in here. Very, very, very strong. I saw they have a Binance AMA coming up pretty soon. So shout out to the Toshi community as well. Dom, is that the chart ready to go?
That is it.
Let's pull it up.
So this is, and yeah, I was trying to find the most up-to-date one, but I couldn't, but it looks pretty much it hasn't changed. So this is a chart which combines the Bloomberg Commodity Index versus the S&P 500. And it shows you historically where equities have traded in relation to stocks. And you can see that right now, everyone is saying, oh, commodities are only high because of Putin and because of the war in Ukraine, right? Right now, historically, commodities are at the lowest point they have been for over 50 years in relation to the S&P 500. And markets by nature are mean reverting. And what that means is that they will eventually go back to the average. And you can see that the average is now about 400% higher in terms of commodity prices than we are right now. You can see where commodities were in relation to equities in 08, in the Gulf War, in the oil crisis of the 70s. And you can see that right now we are at historically low commodity prices. So what that means is that they will eventually meet. Right now, stocks are way too overvalued. So that's one. Yeah. It's not going to be a 500% increase in commodities because stocks will meet that. So if we've got a massive drop in equities, which is what I anticipate, you will also have an increase and a rally in commodities. And the reason why, and it's happening today, in fact, the dollar is going to drop like a stone because they are printing, even though they're lending money, they are still printing and increasing the money supply. And obviously, when you increase dollars, dilution, it drops. And so when the US dollar drops, commodities rally. So right now, you have a situation where literally the worst situation that anyone could ever, the most predictable situation too, let's say, like, honestly, I've been talking about it for ages, where the central bank, because they didn't crush the market earlier, they now have to ease and print money into an already inflationary environment. So essentially, they're turning the money printer back on at 7% inflation. When they turned the money printer on at negative inflation in COVID, it took 12 months to get up to 10%.
Yep.
Now they're going to have to do the same, but at a level of 7%. Like, it's literally like the end of the monetary system. They will have to inflate the dollar so much that it's over. Like there's no coming back, in my opinion. That announcement yesterday of all the central banks basically uniting behind coordinated action and seeing the dollar swap announcement, I just thought, well, this is it. Like, end of the line, really. And so Bitcoin historically performs well when the dollar drops.
Yeah.
But today that's not happening, and that's because of the NASDAQ. So, yeah, I mean, I'm just terribly... I mean, I'm so bearish on like Bitcoin. It's not necessarily about like that anymore. So it's got to the point, like I said, where it's almost bad enough that I can turn bullish again. But there's one more flush left.
Really? And where do you think that flush is going to go in relations to Bitcoin?
20K is first up, and then I'd have to reassess there.
Okay, but you're not still thinking like a 4K Bitcoin like we talked about in September.
Things have got way too bad to get there in terms of the dollar environment. They cannot. The only way that happened with the 4K Bitcoin is by regulation and collapse of like grayscale. Then we'd see that. But now, if it's purely just from what's happening in the stock market, I don't think so, because I think that when you have a massive crash in the markets, you have everything dumps. Like the dollar dumps, gold dumps, Bitcoin will dump, and stocks dump, because everyone is just getting the hell out, because everyone is panicking, thinking it's the end of the world. So we will have a dump again on Bitcoin, and it will go down to at least 20K, because 20K is where there's a hell of a lot of liquidity. On the show last week, I showed the liquidity patch was running up to like 27.4 to like 28, and we got there now. And there is a huge, let's see if I'm logged in, I'll get it up, but there's a huge patch of liquidity under 20K now, like massive. And it's
under 20K.
Yeah, it's very hard to see how it doesn't get there, to be honest. Like,
I love this chart too. This chart has like literally the last 3 weeks, this chart has proved to be incredibly accurate, guys. And we have over 100 people joining us here today. 62 likes. Let's get that likes up to 75 likes. And shout out to Bree. Shout out to My Ultra Journey as well. Welcome, guys, to the stream. These liquidation charts have proved to be incredibly accurate. And the bad news, just by looking at this, is that it looks like you said, a ton of liquidity. Most liquidity is under that 20K range right now.
Yeah, it's we're if you're a market maker and you want to cause max pain, market makers and whales, they go where the liquidity is, and the liquidity is where everyone has their stops, because they know that if they force the price to here 19.5, then it will go straight through all of this, like straight to 18, because of all that. But
this chart is a cheat code. Vamp God Manifesto says this, dude. This chart is a cheat code, bro. Like it literally dumb. Like it's been right the last 4 weeks. Like exactly where this chart says it's going, it's been pretty spot on.
Yeah, it is really useful. Like I use it all the time now. I mean, this is a 6 month chart, so this one is a bit wider and looks down to like here, where we've got 13.5 and 15. But in terms of the 3 monthly, like it's even like worse looking around 20K. Like look at that. Like that is prime.
Yeah.
And Brutes keep saying max pain is always up. No, it isn't. Like that right there. That is.
But what gets us there? Because it's like we're so far from that. I feel like there has to be some sort of news that gets us down there. It's not just gonna go down there because there's a lot of money down there. It's like there has to be some sort of news that sends us in a spiral downward, right?
Well, not really, because the thing is that it's very easy to push price up with derivatives, because you're leveraging money and you're pushing it higher and higher and higher. But all it takes is just a spot whale or a few spot whales to start dumping actually like at market real Bitcoins. Nobody is actually buying or selling Bitcoin at the moment. Like it's all just on Binance and on Bybit and on futures, and it's all just market makers liquidating people for fun. But you can see that the actual like heat map is just, it works like a magnet, and you can see there's very little interest left. Like what we can get to, like what's the biggest like point on here, like 25, 24, like 25, or what do we have here, like 55. Like there is more than double the liquidity in just like one of these bars. In fact, all of these bars have almost twice the liquidation of like the hottest amount here, which is 29.4. So yeah, I mean, it's like I said, it is a magnet. It will get down here at some point. It could go higher, which is why I say to everyone, like, if you are trading all of this, you know, I trade with a short bias because I know it will go back down.
Yeah.
With like very high certainty, not financial advice, but I know it's going to get there. So if I trade with a short bias, it means that I still buy on dips and I still hedge, but my overall direction and my overall trading is targeting a downward price movement. So I keep wide stops because I know that it doesn't matter if it rallies from 20K to 28K. As long as I'm not an idiot and as long as I manage my risk effectively and I don't get liquidated, I'm only wrong until I'm right.
I like that.
But if you're stupid and you go too heavy, then yeah, you can get screwed. But as long as you are correct on direction, and this is what I do with all of my trading. Like if you look at my my account, my trades on like stocks, on like crypto, it's tons and tons of positions because I don't try and pick like market tops and bottoms. I just know where it's going mid to long term, and I sell into rallies, and then I'll buy dips when it seems like really oversold. And when everyone gets scared again, I usually buy Ethereum to hedge against my Bitcoin shorts. Recently, though, ETH is absolutely doing terribly against Bitcoin. But that's because Shanghai upgrade's coming soon.
I like that. And we have some good questions here. Welcome, Bree, back to the Future Millionaires membership. She says, I don't know why I didn't auto-renew. All good there. A good question from Beyond All. He says, what's the time frame for the one more dump scenario? Obviously, just your personal opinion. We don't know exactly where it's going, but what would you say mostly? Like, is it a week, a month, a year? What do you think?
The terms, I mean, it's the terms that you see a lot is slowly and then all at once. And that's how these things go. It will happen when you least expect it. It will happen when somebody sounds the all clear. The market will say, oh, I'm glad that SVB and Credit Suisse stuff is over. You know, we can all move on. And at that point, something breaks and the market absolutely tanks. It's like right now, everyone's getting bullish again because they've expanded the Fed's balance sheet. What a lot of people don't remember, and again, I'm going to have to find my Twitter for this. But I put this before, in fact. But yeah, everybody thinks that when the Fed cuts rates, it's bullish. And it's typically true. But in reality, if we look at 2020, so COVID, March 2020, we can see, here it is.
There you are.
So on the 3rd, on the 2nd of, I think it could have been the 3rd of March, the Fed cut interest rates here by 0.5%. And then 2 days later, the market crashed another 28%. And the reason why is because everybody thought, oh, great, you know, they cut interest rates and they're turning the money printer on. And that's just when everything fell apart because everyone thought it was all clear. And the market works on max pain. It works on frustrating the crowd, and which is why I say to most people, even my own, like, counter trade your emotions. When you start taking screenshots of your crypto balance because of how much money you have, it's time to sell. And when you start wanting to get the hell out of crypto forever because it's annihilated you, that is the time to buy.
That's such a quote right there, because that's true for all of us, right? Like, you're taking screenshots. Oh my God, my wallet's up, right? And then it's like, that's when you need to sell. It's so true. So true. Reverse psychology though, huh?
Yeah. I mean, even I get it. Like, I'm aware of my emotions and I counter trade them. I usually, when I'm thinking my shorts look really good, that's when I buy my hedges. Because I just know that the market functions on max pain. That's the main thing to take into account with any sort of trading is just remember that you've got, it's a game of sharks, and you've got people like Warren Buffett, and it's like Warren Buffett, everyone's like, oh, Warren Buffett's going to save regional banks. They've all flown to Omaha to meet with him. But he hasn't put anything out, and he hasn't done anything, and he won't, because he's a shark. If the deal isn't good and he doesn't want to buy it, then he won't. They can't force him to.
Yeah.
And so it's incredibly bearish that they all flew to Omaha and none of them have got anything, or he hasn't mentioned anything. It means that he has seen the books and thought, I'm not touching that.
Yeah.
And this is where somebody will raise the all clear, or again, the Fed starts, swapping, increasing the USD swaps like they announced before with coordinated central bank action. Again, like, we're in this crazy world where people think it's bullish that central banks have had to all coordinate to fix the financial system. That's just like the opposite of the truth. If the central banks have to coordinate to fix the financial system, but we don't know yet what's broken and we're still being told it's fine, that is huge cause for concern, because they don't just intervene for no reason. Like, they intervene when there is something that is causing a systemic risk. It's just a matter of time. Something will snap, and it can be anything. The market decides when it wants to take notice. For example, what I said about COVID, after China locked down, second largest economy, the market made 8 new all-time highs and went up for 2 months.
Crazy.
And then it took notice, because as soon as everyone thought, it was way too obvious for China to lock down and for everyone to short. Like, the market will not allow that because it's way too obvious for everyone to make money. So what does it do? It keeps going up, and everyone says, oh no, it's fine. Markets are forward looking. It's looking past that into the future.
Crazy.
And then it suddenly decides, oh wait, and then everything nukes. It's just to be aware that, like, when you're trading, you are playing against somebody or somebody's bots.
True.
And
absolutely.
It's just like playing chess, basically. You need to know when and where and how somebody else is acting, because that way you can almost trick them or trick yourself. It's all a game.
It's all a game, exactly, guys. 120 plus people are joining here today, guys. We're gonna be doing this first giveaway. Once we get to 100 likes, we'll do the first giveaway. We're at 82. So 18 more people. Smash the like button. First giveaway coming here very, very soon. And my ultra journey said emotions really can mess you up. Still learning to control. It's a tough game to learn to control these. But yeah, we will be doing that giveaway in a couple minutes. Once we hit 100 likes, we'll get the first giveaway. So Dom, what do you attribute the price rise that we've seen this month to, really, in the crypto market? I mean, we were at a 19K Bitcoin, currently at 27,000 plus today. What do you attribute this to?
What date was that?
That was on March 9th. So 11 days ago. 11 days ago.
March 9th. Let's see.
And we're almost at 100 likes, guys.
So if we look at, let me share this tab. So here we have NASDAQ. And you said it was March 9th?
March 9th was when we were near the bottom. Yeah, March 10th, actually, excuse me.
There we go. So March 10th. Here we are, 10th of March at around 5:30. Is that the same time? 5:30.
10th of March. Well, we're in different timing, right? You're in London time?
Yeah, that would have been 9 a.m. for you on 9
Yeah,
a.m.
exactly, yeah.
Was that the low of Bitcoin too?
The low of Bitcoin looks like it was March 10th at 2 a.m. my time. So
what would that have been?
March 10th at like 5 p.m. your time? Or no, like 9 a.m. your time? This is also on CoinMarketCap. Who knows how accurate?
Fair enough. Okay, well, let's see where it got. Where was the 9th? So it would have been around like here. So this sort of period anyway.
Yeah.
In between. So you can see in that time frame, we're up 6.69% on the NASDAQ. If you compare that to the US small cap, price, let's go 30 minutes. And then, where are we? So here we are. So what was that, 9th of March?
Yeah.
And you can see we are down in the overall market. This is a small cap index. So the small cap index is down almost 10% in that time.
Really?
Because it's the most sensitive to recession. Because again, rates crash when it thinks there's going to be a recession, because a recession means the Fed cuts. The NASDAQ rallies historically when there's a low rate environment. So NASDAQ went up by 6.7% in that time period, even though small caps dropped by almost 10%, and the overall S&P dropped by where are we? So again, let's go for the 9th. S&P to where we are now, again down like 1.5%. So again, it follows the NASDAQ. So people think like the world is ending because the S&P dropped, but the S&P is every single company. The NASDAQ is up, and Bitcoin acts like a tech stock, because you got to remember it's like less than $1 trillion market cap, which is a third or less size of just Apple, just one company. So even though everyone thinks, oh my God, it's like massive outperformance, if you compare it to the NASDAQ, it's sort of just on par with how it normally runs. Like it does move at a higher velocity, but the NASDAQ is up 6.5%.
Yeah.
So even though financials have been massively weighing on the S&P 500, and particularly regional banks have been weighing on the small cap index, which is down 10%, NASDAQ has been ripping. Like everyone's been buying the NASDAQ up until today because it's just bots that are programmed to think rates down, NASDAQ up. But in reality, they completely discount the fact that, funnily enough, in a recession, Apple doesn't sell as much iPhones. Like it's just not taking into account anything qualitative. It doesn't think, oh, recession means they might not sell as many iPads, people won't buy as much. It just thinks rates down, tech up, buy. It doesn't think about any of the in between. And that's why we're having the NASDAQ actually come under pressure today, because, you know, when Apple reports its earnings, if the whole market has gone to shit, they're not going to do well. So, I mean, this is, the problem is that people think that crypto has a mind of its own. And in some ways, you know, it does. It's much easier to manipulate, which is why I never trade it with tight stops like I would on like S&P, because it's just such an illiquid market that it's controlled by a few entities. And that's why it's so easy to trick people. In reality, you know, I'm not. It's not a bullish sign for me. Like I know that because when I'm tweeting these bearish things, like I am always talking about the wider macro environment. Like even though this move, like how long's it been? What, less than 2 weeks and we're up like 30-40%. Some people think, oh my God, you've been so wrong. Like it's gone up, but 2 weeks literally like that's like a day for me. That's not the time horizon I work on. Again, I just add shorts when it rips, and the higher it rips, the better for me because it means I get a better price because I just average in every time. Like over the next couple of months, it's going to go down. It's going to hit that 20K liquidity patch that we spoke there because that's where max pain is. Max pain is no longer up. It's clearly down because everyone is bullish. And why wouldn't they be? You know, everything is pointing to the fact that, you know, QE means markets go up. Apart from when people figure that out. When people figure out QE means markets go up, markets go down. Frustrate the crowd is the aim of the game.
Absolutely. So Dom is predicting a 20K Bitcoin here. Guys, we have the receipts, which I'm excited about, and he's been right about 99% of his predictions. Real quick, I want to get your take on this, and then we will do that giveaway, guys. We hit that 100 like meter. We're going to do that giveaway in just a second. What's your take on this? Florida Governor Ron DeSantis calls to ban central bank digital currencies. Bullish or bearish for crypto?
Bullish. Yeah, it is bullish because like this is where like because I've been saying for months inflation is coming back, they need to crush the market. Like I've been saying this for months, and I'm not even college educated. I have never studied economics as a subject. I've taken some professional exams like with work.
Really? How are you so knowledgeable?
Just from this is where I think like if I can see it, these people have got masters from like Harvard, they've got PhDs, they're doctors of economics. How could they get it so obviously wrong and screw it up so badly? Like when I can see this with no college education, with only a couple of professional exams, and just from learning, just from watching markets and absorbing it, I can know and predict what's going on. But they can't, and they have like 50 of the most educated economics professors known to mankind.
Crazy.
Like this is where it's like gets onto the edge of conspiracy, because how can they be so stupid? Like that, like little old me can see what's happening, but they can't. It doesn't make sense. Which is where I see, like, you know, the fact that, funnily enough, if everyone has their money split across tons and tons of different banks, including regional ones, it would be much harder to move it onto a CBDC than if everybody had all of their money in the top 4 banks and everyone had put it and concentrated it in JP Morgan into, you know, Citigroup. And that's where I think, well, I mean, and it's historically proven, and I recommend everybody to watch this. And let me get the tweet up so that I can
pull that up. Yeah, we got Believes in the house. He said, look at this still brown-headed, not vaulted individual here. He's talking about me. Believes in the house. He dyed his hair Volt green. It looks great. Believes. Hope you had a good weekend, brother. Good to see you in here. Pull this tweet up.
Yeah, here we go.
And I'm going to get the tweet in the background, guys. You still have 1 minute. 1 minute if you wish to enter our first giveaway. Actually, we're going to be doing 2. Just retweet this tweet. It's pinned to the top of my profile. 243 retweets so far. Retweet this. Enter to win $100 each. We're going to be doing that twice. This is pinned to the top. Dom, it looks like you get the tweet up. Let's go ahead and get this ready to go.
Yeah, everyone should watch this this film. It's called Princes of the Yen. And so I like to talk about the future in regards to the Bank of Japan, and because the Bank of Japan, basically in the 90s, it was decided that they would manufacture a crisis in order to move the economy onto a new style. And so the central bank purposely lent out as much money as they could, printed as much money as they could, and they gave companies debt that they didn't even ask for. So companies were coming to them for loans, and they were giving them more than they wanted. They purposely caused a financial crisis in order to move the Japanese economy on from the wartime economy, the post-war economy Japan had. Japan used to be the most efficient and well-known, country in the world, and that was because they got destroyed, obviously, after the Second World War, and they had to rebuild everything in such a structured manner. And so towards the 90s, even though they'd been so efficient and done so well, it was decided, not by the people, by unelected central bankers, that they wanted to move on to the American-style capitalist system from this post-war economy.
Mm-hmm.
But you can't make people change what they feel comfortable with, and you can't make people change what they believe is already working. So how do you make people change their mind? You manufacture a crisis. And how can you do that? And one way that you can do it is by printing tons and tons of money and lending it to tons of banks who lend it to tons of people. Expand the money supply so that everybody has tons of money and they can spend it on whatever they want. And inevitably, people spend too much. And then when it inflates, they hike up interest rates. And suddenly everyone has all this debt. And now they have to pay exorbitant interest rates. And they can't afford it anymore. So banks then have to stop lending. And this sounds exactly like what is happening right now, because it is exactly what's happening right now. All of this has already happened once, and it happened in Japan 20 years ago. In the 1990s, Japan had a financial crisis, and then 2008, everyone else had ours. Like, we are just 10 years behind Japan, basically. So if you watch this, it will literally show you what the Bank of Japan did in the 90s in order to move Japan's economy onto a different style. And it's literally the same thing that they did with COVID. Like, it's the same story. And this is an explanation, this documentary, on how central banks influence policy. The worst is the ECB. Like, you got to remember, central banks, none of these people are voted in. Like, they're just
crazy.
They're just independent banks that we've decided control all of our money.
Crazy.
And nobody votes for them, but they purposely decide when to cause financial crisis. Like, it's insane. And nobody understands it, and that's why nobody cares. But yeah, if you don't understand central banking, then you do not understand, like, the whole world that you've lived in. Because it's honestly like red pill moment.
Pin this. Do you already have something pinned? I guess it's called Princes of the Yen, guys. I'm gonna watch this on YouTube. Princes of the Yen. You're not signed it anyway, so on YouTube, Princes of the Yen. Yeah, we'll get that. We'll get that locked in. I want to watch this. It sounds like it's very informative here today. A must watch.
I'd say that the first half an hour is very, like, scene setting, because it obviously needs to explain the context of the economic crisis and what the Japanese economy was and what they were trying to move it into. So I'd say the first half an hour is like pretty slow, and I still find it interesting, but most people who don't generally like finance might not.
Yeah.
But like, the final 45 minutes is like insane. I just pinned it on my
Twitter.
Cool. But yeah, it's worth persevering, because honestly, you won't believe the authoritarian control in nature.
Absolutely. We'll go get that look. Shout out to William Mack. He says, salute family and Jay, guys. It's pinned to the top of Dom's Twitter, and you guys should be following him if you participate in the giveaway. Let's do that first giveaway for $100 of ETH, and then we'll do that second one in just a bit. This is the tweet that everybody did. Thank you so much to everybody that's joining in. 120 people, the entire stream. Hopefully you're enjoying this. This is one of my favorite streams of the week. This is going to be $100 ETH is what we're going to title it. And let's go ahead and do the first giveaway. 255 participants. Let's see who wins. Dom, you ready?
I am ready.
Let's do it. In 5, 4, 3, 2. The winner of $100 in ETH goes to Macnum. Macnum, congratulations on winning the first $100 ETH giveaway. I'll be sending you a DM on Twitter. Huge win here for Macnum. Little $100 ETH giveaway on a Monday morning. Congratulations to Macnum. We will be doing that second giveaway in about 5 minutes here today. Dom, I wanted to get your thoughts on one more thing from Watcher Guru. It's a tweet. But you talked a lot about Credit Suisse. Tron founder Justin Sun just proposed a $1.5 billion offer to acquire Credit Suisse. Thoughts on that?
It's just for a little bit of hype and a joke.
From him?
The guy's under like federal investigation by like tons and tons of countries. Like there's no way they're letting him near the banking system.
Really?
Just yet. There's no chance in hell of that ever coming to anything. Like he just had his diplomatic immunity like revoked by like Grenada.
Grenada. Where does he live? Is he from? Is he in China?
Yeah, he's Chinese. A few people are asking about like Colt, and yeah, it's super frustrating that like the Colt price has dipped, and the reason being, if you look on Etherscan, somebody like a wallet unstaked 50 billion, and they sent it to Gate.io, and so obviously they are selling, and that's what causing the dump. Like Jesus, just everyone jumps into being a conspiracy theorist. But yeah, like it's just one of those things. Somebody with lots of money has decided that they want Tether, but it happened about 3 days ago, basically. So it's probably done. I mean, I usually would sell something quicker than 3 days. So yeah, it's basically probably done with now. It's hard to say, but yeah, all sorts of people making conspiracies. But yeah, if you look onto Etherscan, the wallet is like OX4FAA or something. It had 50 billion staked, and then it unstaked it, and it sent it all to Gate.io. And so that's the reason why there's been some sell pressure, because that's like $300,000 to $500,000 worth of.
No way. Damn.
Yeah. So and no, before anyone goes mental and says, "Oh, Guardian," no, it was just a random buyer. If you look, you can see that they bought the Colt, they staked the Colt, then they withdrew the Colt, and they sold the Colt at a loss. But yeah, so that's the reason why it's dipped. So yeah, it's probably a good time to get involved, to be honest, because yeah, it's just somebody offloading some tokens.
And a lot coming for Colt too. Do we have an update on the Modulus blockchain?
Not on the blockchain, but I did see there's actually been a lot of people, a lot of companies or like protocols coming out building on it. There was an NFT marketplace. I think there's a Cult Punks collection. I don't know if it's on the official. Type in Cult Punks. It wouldn't be. It's not official to my knowledge. Cult Punks.
The NFT.
That's
Cult Punks. A few more days until the show begins. Wow. So will this be like sold NFTs on the Modulus blockchain?
Yeah, I think it's.
Nice.
So I think the collection is being minted on Ethereum, and then I presume that they'll move them onto things. So I haven't heard any updates on actual Modulus, but
I'm gonna follow them.
Yeah, they've. I
like it.
They've got those coming out. I don't know much info, but yeah, I mean, I don't know how much they'll cost, but I'll probably pick up a couple myself.
They're building. They are building. Guys, we're going to be doing that next giveaway here in about 4 minutes. Dom, what's some Vamp updates for the people? I know we have some games that you guys have acquired. Any updates with Vamp?
Yeah, it's a quiet time in the fact that like we've been in this period of like transition where we've moved our overall staking platform across from being sort of metaverse and gaming specific to being pure layer one. So we've got the BNB and we've got Ethereum still, and we're going to have Solana. I also spoke to, and when I was at ETH Dubai, I managed to speak to Andre Cronje, who is the founder of Phantom, and I spoke to him about launching an FTM staking pool.
Nice.
So yeah, he's like a huge, well-known sort of DeFi guy. So yeah, spoke to him and told him about our plans, and he's going to see what he can do to help us out. And he's got like 300k followers, and he's a huge key opinion leader, let's say. But yeah, I mean, we're in between this transition where we've moved from just sort of the metaverse staking platform in one game to having the game launcher out and taking over other games, basically. So it's a bit of a quieter period, but we should have at least like 3 games completed and out probably by the end of April.
Nice.
So very soon. It's only next month now, but yeah, it's been a quiet period, and that's also been because I haven't been pushing as hard, because obviously I've been very well aware of the macro condition. If you look at alts right now, they're really not doing much. They are suffering still. Like, it's purely a Bitcoin rally. Even Ethereum is like done well, but it's lagging substantially. So after the next flush, I'll be pushing hard, and Vamp will start to shine again. But yeah, I've just been conscious to make sure that we save ammunition for the right time.
Smart. Yeah, it's all about timing in crypto. What's up to Mike the investor? He's in the chat as well. Shout out to Mike. Good to see you in here, brother. And I think we're ready for that next giveaway as well. Let's get this rallied up. Congratulations to our first winner. Let's go ahead and get the second one dialed in, ready to go. Second winner of $100 coming live right now. Let's go ahead and get this. Let me get the tweet pulled up here. This was the tweet. Thank you, everybody, for retweeting. 257 plus retweets here. Put this pinned up. Put into our stream. This is a Twitter giveaway. Just so everybody knows it's not rigged. Retweets. Put in the URL, and we will do. There you go. And we'll do our second giveaway of $100 of ETH today. Dom, you ready for giveaway number 2?
I am.
Let's do it. 255 people. Good luck to everybody. The giveaway is going live in 3, 2, 1. And the winner is Diamond Hands 170. Actually, I've connected with you before with the Artifact Clone X NFT. Looks great right there. Diamond Hands 170 with a huge win. Hopefully they Diamond Hands this ETH, because $100 of ETH worth today will probably be worth a lot more here in the future. Congratulations to Diamond Hands. Great win right there. So, Dom, where are we thinking we're going to be going in the short term? Do you really believe that 20K is going to be more likely than a 30K here in the short term?
Yeah, I mean, we've got the Fed decision on Wednesday. You got to bear in mind that everybody basically last week was saying about the ECB, right? We had the European Central Bank interest rate decision, and everyone was saying, oh, they're going to hold rates where they are, or they're going to cut rates. Or they're going to raise by 25 basis points, because everyone had expected 50 basis points. And funnily enough, the central bank did exactly what they told everybody they would do, and they raised 50 basis points. And so the Fed has told everybody that they are raising rates still. And I think everyone is saying, no, you're not. But they've said they are, and it's very likely that they will. So yeah, I think the Fed will raise rates by 25 or 50, and the market will pull back.
Well, there we have it. And we had a 20K Bitcoin prediction. Anything else on the top of the mind before we wrap up this morning? Any big news? Anything that we need to talk about?
I don't think so. I mean, what I mentioned already about sort of our plans with Vamp, and so I think for now that's all I've got for updates.
That's it. Well, we will be back every Monday, 9 a.m. PST. Ton of viewership here today. Over 130 people tuned into the stream today. As always, guys, a lot of knowledge. It sounds like from the Doom King that 20K is still on the horizon, but only time will tell. Dom, real quick, last question for you. What's more likely, or what will happen first? A 30K or a 20K? Do you think that we wick up to 30, or is it mostly max pay until 20K?
I doubt it, to be honest. I think that we'll see 20K before 30K, but obviously it's quite a call because one is further away than the other.
True. Yeah. By 7K to 3K, but we shall see. Dom, thank you so much. To our two winners, congrats. Thank you everybody for tuning in today. I hope you enjoyed the stream. I really did. Always learning a lot on these Macro Monday streams. We appreciate you guys. I'll be back at 9 a.m. PST tomorrow, and me and Dom will be back at 9 a.m. next Monday. We appreciate you guys. Hope you have a good week. Crypto's looking good. For how long? We shall see. Thanks so much, everybody. See you guys soon.